Hello and welcome to the Daily Finance Wrap, your daily dose of personal finance updates covering investments, personal finance, insurance, loans, real estate, and everything else to do with your money. We, of course, would love to hear from you, and we're very happy if you could write in with your questions and queries, and we take them up with our expert analysis. Well, but first up, it's time to take a quick check of the top headlines this Thursday evening. It was a day of profit taking on the Lal Street. The markets declined quite sharply with the Nifty closing sub 24,000. Remember, it was expiry and the markets, as expected, turned quite volatile. The Nifty was down 360 points. Amongst the big losers was SBI Life Insurance, HDFC Life, Infosys, M&M, and Bajaj Finance. On the other hand, Adani Enterprise, Shriram Finance, SBI, and Cipla were the top gainers on the Nifty. Sector-wise, stocks in auto, banking, IT, and FMCG declined, while PSU banks and media stocks gained in trade today. Well, the story of the week has been HDFC Bank, one of India's largest private sector banks. HDFC continued its upward journey, gaining about 1.4% to make an all time high of 1,836. This comes in as the counter has gained in the last 6 out of 8 trading days. The market cap of HDFC Bank now stands at 14 lakh crores for the very first time. BNP Paribas has set the price target for HDFC Bank at 2,550, suggesting a potential 40% upside over yesterday's closing price. Goldman Sachs also reiterates a buy on HDFC Bank with the price target of 2,156 rupees apiece. Well, moving away from equities to what's happening in the precious metal, gold prices declined in trade today due to a stronger dollar. Spot gold was down 0.3%, falling to $2,627 per ounce. The dollar index has risen by zero point 0.1, making gold less attractive for buyers using other currencies, which has impacted the supply demand dynamic. However, in India, gold prices have steadied around the 77,000 rupee mark per 10 grams, while 22 carat gold was priced at 71,060 per 10 grams. The main factor influencing gold prices right now is US economic data and easing geopolitical tension with the ceasefire in the Middle East. Well, those are the top headlines that we're tracking this Thursday evening. But let's go into an interesting conversation, and this applies to most of us around watching this channel, and that is understanding your salary slip. What you must have, how should you save better, and how should you take advantage of the tax benefits that are available. Joining me to take this discussion forward is Balwant Jain, tax and investment expert. Mr. Jain, good evening. Thank you very much for taking the time out to talk to us. Mr. Jain, if you're an investor or not an investor, I think one thing that applies to most people is having a job and, of course, getting paid at the end of every month. But we all do know that inflation in India is constantly rising. What I want to understand from you to begin with is what salary components should employees prioritize when they negotiate their salary?
See, whether it is higher inflation or lower inflation, the object of every salary employed is to minimize his tax liability. So the salaried person can minimize his tax liability by structuring his salary in a tax-friendly way. First of all, he can get a HRA component in the salary if he doesn't own a house. If the employer provides rent-free accommodation, then he should opt for this rent-free accommodation, because the perquisite value of rent-free accommodation is very negligible as compared to the market rent. The second component the employee can opt for is a LTA benefit, which comes tax-free in his hand. Moreover, if you are in a higher tax slab, you can opt for a motor car provided by the company, that the perquisite value of which is very, very negligible as compared to the actual cost. One more item which an employee can opt in his salary structure, salary component, is employer's contribution towards superannuation fund, provided the overall contribution by the employer in your EPF, NPS, and the superannuation should not exceed 7.5 lakh in a year. If it exceeds 7.5 lakh, then the excess becomes taxable in the hands of the employee. And these are the broad components which an employee can uh, work out to reduce his tax overall tax liability.
Hmm, that is such useful information. But let's dwell more into this, Balwant. Well, you've told us what one should prioritize by negotiating. Start by telling us what employees can do to optimize their salary structure in order to maximize in hand salary while they stay tax efficient.
See, the best way to maximize in-hand salary is to opt for new tax regime under which you are not allowed any exemptions, deductions, whereas the tax applicable tax rates are lower. In case the old tax regime is beneficial for you, and since there are several items comprising and are eligible for section 80C, which generally overflows, like the life insurance premium, home loan repayment, school fee of your children, you can get your EPF contribution minimized. The employer may agree to restrict your EPF contribution to maximum to 15,000. Otherwise, the employer will deduct EPF contribution of your 12% of your basic salary. So if your employer agrees, you can get it restricted to 15,000 salary.
Well, Balwant, just talking about HRA, and you highlighted that in our first answer itself, but talk a little bit more about HRA benefits because I'm assuming they're different across different cities in India. And how can one look to maximize this component?
See, only an employee who receives HRA from his employer is entitled for HRA exemption. The HRA exemption is restricted to lowest of three items. The first is the actual HRA received. The second is excess of rent paid over 10% of the basic salary. And the third item is there are two different criteria. If you are staying in a metro city, then you can claim up to 50% of the basic salary as HRA exemption. And if you are not in metro cities, then the maximum HRA exemption available is restricted to 40%. As far as maximizing this benefit is concerned, since the law prescribes the limit, there is no way you can maximize it, but you can maximize the tax benefit by paying rent to your spouse or to your parents, provided you are not owner of the house which you are occupying and in respect of which you are paying rent. Even if you are a joint owner of the house property with your parents or with your spouse, you are not entitled to claim HRA exemption. The law does not restrict payment of rent to your spouse or to your parents, as long as the rent is regularly paid and the taxable income in respect of the rent is declared by the recipient, be it your spouse or your parents.
Okay. Balwant, also, how do employees often miss out on claiming reimbursements and what documents, what paperwork should be maintained?
See, Samina, there are various items or allowances which can be treated exempt only if the employee furnishes the proof of the he having spent the money, like LTA or HRA. So for HRA, the employee has to furnish a copy of agreement as well as a proof of payment made to the landlord. As far as LTA is concerned, you have to furnish the air ticket or the railway ticket or the invoice copy in case you have availed other mode of transport. Though while deducting the tax, the employer is under an obligation to obtain the documentary evidence in claim of the reimbursement. Still, the employee should preserve those documents in order to submit those documents in case your income tax return is selected for detailed scrutiny. In case you fail to submit these documents to your employer before the final tax is deducted for the year, the employer will treat those allowances as taxable and will deduct the tax, and you will be cash negative to the extent, and then you will have to claim those exemptions while filing the income tax return, and the refund may get delayed. So it is better to submit the documents as early as it is possible.
Hmm. How, what happens to somebody who's just about starting their career, Balwant? Which salary components should they focus most on while negotiating? Should it be the fixed part or the variable part? Should it be the in-hand bonus that comes in? Should it be the non-financial components that go in? You want to shed some light on that?
See, Samina, normally the companies have the fixed policy about variable salary or fixed salary. But since an employee who is starting his career needs more cash and is not in a position to make investments which are required for Section 80C, etc., it is advisable for him to opt for a new tax regime where the applicable tax rates are lower and no investments are made required to be made. This way, the new entrant to the job can have a maximum cash in hand.
Right, Balwant, another area which we've not talked about much, but it usually applies to a lot of young people who are coming into the workforce, and these are non-cash benefits, right? Like health insurance, meal vouchers, wellness programs. Uh, are they more valuable, or would you say that the better way to do this is to take cash compensation? How does the balance work?
See, the health insurance is a very important whether you are a salaried or you are a self-employed. If you opt for health insurance provided by the employer, there is a benefit that it covers your pre-existing disease from the day one. And if your parents are also allowed to be covered, then it is very beneficial because generally for parents it is difficult to get a health insurance at the normal rate. The insurer normally loads it. Moreover, if the employer provides health insurance to you or your family, the and pays the premium for it, it is not treated as taxable perquisite for you. If the employer offers to pay your insurance, health insurance premium, that too also comes tax free in your hand. So you can negotiate with your employer to get these benefits tax free in your hand. Moreover, I would advise all employees to have their personal health insurance as well in addition to the employer provided health insurance, because the employer may decide to discontinue the benefit of health insurance, or you may leave the job and the new employer may not provide you health insurance, and the cost of hospitalization have gone up significantly, and for a normal person one hospitalization may make you cash negative for the entire year.
That's such a good point, right? With the cost of health inflation and rising health cost, this is so true, Balwant. It should be you should be protected and covered because you really don't know. Also, Balwant, just staying with perks and non-cash benefits, how do you evaluate whether you should opt for flex benefits over a higher in-hand salary?
That depends on your cash requirement. If you can do with lower cash in hand, and if the salary structure helps you in saving tax and the non-cash benefits which accrues to you are actually useful for you, then you can opt for that. Otherwise, as I said earlier, for a new entrant to the job market, it is normally advisable to opt for a maximum cash in hand salary.
Hmm. Well, but then the same rule applies for individuals who have the option of either picking monthly increments or maybe a bonus. Is that a preferred option, or would that again be dependent on cash flow, which is so subjective to the individual employee?
Exactly. The same criteria should apply while opting for a monthly increment or the bonus, whether you need cash urgently, or rather you feel that you can deploy the cash in a better way rather than availing those non-cash benefits.
Hmm. Well, with another factor that you often come across, and somebody starting early on, we never realize the importance of PF or Provident Fund, uh, which is probably more commonly known as. Should one opt for a lower contribution to PF to increase in hand salary, or you don't think that's recommended? Because I guess when you're young, you want more money in hand as opposed to money going into a safe kitty.
See, Samina, since we do not have any social security system in India, and for salaried people, it is the only the EPF balance which comes handy at the time of retirement. Plus, the since the interest on EPF comes tax free in your hand as long as you are working, it is always advisable to contribute to maximum possible amount towards your EPF, which help you create a substantial corpus at the time of your retirement. Plus, it plays the debt part of your portfolio, which one needs to have in addition to investing in equity. One needs to have a proper asset allocation for his or her portfolio. So that the PF balance or PPF balance takes care of partly the debt portion which one needs to have.
Hmm. Okay. Also, one question that may be slightly more far-sighted, right? But and this is obviously not for people who are starting off their professional journey. But assuming there are lifestyle changes, responsibilities come along, objectives change as we go along the career chart or the career road. In your opinion, what can one do to align salary structure with these lifestyle changes? Maybe it's changes such as having children, paying for school fees, or bigger expenses such as buying a home and then, of course, having a monthly EMI to pay.
So, see, the social structure had changed in India. Earlier, the joint family structure would take care of care of your expenses during retirement. Moreover, the children would stay with you during your retirement and would take care of your expenses, which is no longer true. In most of the cases, the children either go abroad or settle down in the different city, and it is very difficult for you to ask for money. It is different thing that the child is staying with you, running the household expenses, and is different when you have to ask for money. So it is always advisable to prepare for your retirement. And in my opinion, Samina, retirement is the most important financial goal, because once you retire, you do not have significant avenues available to increase or enhance your income, and you have to live within your retirement corpus. Moreover, as the saying goes that the time is expands according to the time available, work expands according to the time available, the expenses also expand according to the income available. So one should take care of his future requirement and save accordingly, and contribute towards those retirement schemes.
Balwant, you're so right, right? I mean, retirement is the only certain goal and the only common goal that all of us have. And
Yes.
probably it's the most, it's least talked about and has the least significance, especially when you're young and ready to go and when everything's working in your favor. But yes, retirement is the most important goal. And from the first salary that comes into your bank, you need to start planning for it. And I think that is general consent and agreement. Take it seriously. The earlier you start, the better it is for you. Well, with just one quick question, in fact, we'll do two quick questions. One last one to do with medical reimbursements. I know we alluded to health insurance a few minutes
Mm.
ago, but how can employees use LTA and medical reimbursements effectively to reduce their tax burden?
See, Samina, the tax benefits which were available up to 15,000 in a year in respect of reimbursement of medical expenses have been discontinued with introduction of a standard deduction. So there are no tax benefits for reimbursement of medical expenses. As far as LTA benefit is concerned, LTA benefit is available during for two times in a block of 4 years. The current running block is 2000. It is a calendar month. So 22, 23, 24, and 25. So you can avail the LTA benefit twice in a period of in a block of 4 years. The block is fixed. It is a 4 calendar year. It is not necessary that you go for LTA in alternate years. You can even spend LTA, both the LTAs in single year. In case you are not able to spend the LTA amount, you are allowed to carry it forward to the next block of first year of the next block. And in that case, you will be allowed to have more than two journeys. Please note that the LTA benefit is available only in respect of fare within in India. If you are going abroad, you cannot claim the LTA benefit in respect of foreign fare. As far as the qualifying, there is no restriction, monetary restriction. But in case you are traveling by air, you get a deduction of equal to air fare for yourself and your family, as well as your parents and your siblings, provided they are uh, financially dependent on you. In case you are not flying, and if you are going by railways, then first class fare is allowed. In case you are not taking either of these mode of transport, then you can claim amount equal to the first class railway fare for the distance covered. In case you neither fly nor take a train journey.
Well, Ms. Jain, let's now quickly go across to our questions that we have from our viewers. The first question is from Charmi Patel. She says, I've noticed PF deductions from both employee and employer contributions. Can you explain how these work and what happens to this money?
The employee's contribution, the employer and employee both contribute 12% of the basic salary. The employee's full 12% goes into his account. The employer's contribution are out of 12%, 8.33% goes to your PF account, and the balance goes to your EPS, employee pension scheme account. Uh, that's it.
Yeah. Also, Nidhi writes in Balwant and she says, could you explain how Form 16 relates to monthly salary slip and what should she be cross checking between these two?
So you have to gather all 12 salary slips, add up various components, and verify whether those tally with the Form 16. It should ideally tally. And if there is some difference, I think you should be able to reconcile it yourself. And if you are not able to reconcile, then you have to get in touch with finance and HR of your company.
Hmm. Balwant, also Preetham Das writes in and he says he's planning to switch jobs. How does he ensure that his gratuity and leave encashment are correctly calculated on his final salary slip?
So you know how much gratuity you are entitled to, provided you are completed 5 years of continuous service with the employer. And as far as leave encashment is concerned, you know how much encashable leave are accumulated, and then you can verify the calculation.
Balwant, also Kunal writes in and he says he's noticed TDS varies month to month even though his basic salary remains the same. What affects these fluctuations and how is this calculated?
I see the TDS on salary is calculated based on your annual salary for the year, the tax liability on it, and then the tax is divided in 12 parts and is recovered over 12 months period. In case the salary is stagnant for all the 12 months, I don't see there should be any variation as far as TDS amount is concerned. So there may be some changes, either you have earned some incentive during the month, then the entire working is redone, or you have got increment during the year, or you have got bonus during the year. So I don't think there should be any change in your TDS amount as long as there is no change in your salary component for the month.
Very lastly, Vineet Patel says his company is offering flexible benefits where he can choose between different components. How does he optimize this for maximum tax savings?
So first you have to find out whether the old tax regime works for you, or new tax regime works for you. In most of the salary people, the new tax regime works because the HRA benefit, LTA benefit, home loan benefit, and the various superannuation contribution benefit, your own PF contribution benefit, home loan repayment, etc. It works for a salaried employee. But still, you need to work out whether the old will work or a new tax regime will work. At the same time, you have to evaluate the need for cash in hand. So, in case you need more cash in hand, then you may have to opt for a new tax regime offering lower tax rates and no requirement to make investment. So, this is you have to do case to case basis. There is no ready made formula for arriving at whether which structure will work for you.
Right, thank you very much, Balwant, for talking to us today and helping our viewers understand everything that they should know about their salary slips. If it's your first job or your last job, please keep in mind that you review all of it and, of course, go in prepared for negotiations with your HR manager. Thank you, Balwant. Great talking to you today.
My pleasure.